What's up, YouTube? Listen, family, today class will be in session. Our word of the day is exhaustion gap. That's what happened today. I want to teach you guys what it is, but more importantly, how to take advantage of it, okay? But listen, before we dive into that, do me a favor. Please make sure you like and subscribe. Help this video get at least 1,000 likes. And without further ado, let's go ahead and dive into it. Okay, guys, to kick off the new year, you saw a sell-off and a gap down in some stocks in some instances, guys, and an exhaustion gap is what took place. Okay, you had Wall Street beginning the brand new year, coming off a holiday break, Christmas and New Year's, so they're back at the desk. First thing they do is start to sell, aka take profits. Anytime you hear that, trimming, rebalancing, selling, profit taking, all of that stuff means the stock price is going down, okay? And so again, not that you have to panic, but you need to know what's going on. And so an exhaustion gap is a technical signal marked by a break lower in prices, usually on a daily chart. So that's the 1 day time frame if you wanted to see this play out, but I got you guys covered. Stay buckled up, okay? After a rapid rise in a stock's price over several weeks. So we've been going up not only several weeks, we went up all of 2023, okay? This signal reflects a significant shift from buying to selling that usually coincides with falling demand for a stock. So long story short, guys, you may need to be preparing to see stocks go down. And if stocks go down, that simply means you ride puts or pick six to take it to the house for me, okay? I'll teach you all that. I'll do it with you to make sure you take advantage of certain stocks that are going to go down, okay? Now check this out. Look at this example of an exhaustion gap. You will see in both of these instances, the stock was trending up before it had a significant gap, okay? And the gap is very obvious. It stands out different than your normal type of gap. That's why it's called an exhaustion gap, okay? Now take a look at this chart. This is Apple, and I choose Apple one because I make $100,000 a year alone with this stock, both to the upside and downside, but also it is the biggest weighting and the most held stock by most people, especially on Wall Street in the market. But look at what happened today to start the new year. Apple was way up at near 195, 192, and they threw it with this exhaustion gap all the way down to 185, okay? And it went as low as 183 on today. That's an exhaustion gap. So what your homework assignment is to look at this chart, but look to the left and look at what happened. Number one, find all the other exhaustion gaps, and then look what followed an exhaustion gap so that you can kind of know what you need to be preparing for, okay? That's today's lesson, guys. I wanted to introduce our stock lingo word of the day, which was exhaustion gap, and more importantly, kind of correlate it to what took place in the market for the first trading day of the new year. We've been going up, so we're tired, okay? It's like running up a bunch of steps. You get to the top of the steps, you got to catch your breath. You're exhausted. So you gap down, you lean down, your hands go to your knees, okay? And that's what this was today. Pay attention to what follows on tomorrow and the following day, all right? Without further ado, let's go ahead and dive into 3 stocks to buy now. Okay, guys, kicking it off with the way that I hedge my portfolio, okay? That's all this is, okay? It's the SQQ, meaning when stocks go down, this will go up. And speaking of going up, check this out, guys. It went up from $13 on today all the way to $14.32 at the high, which was around 6.8%. This is why I pound the table about you guys, 1, being patient, number 2, having at least a 3-month outlook. Not that this is going to take that long, but you want to know that I'm building something. I'm not looking for an immediate reaction or return right away, but I'm building this because at some point the market will come down, and when it does, this goes up crazy, okay? And then if it keeps going up, which it will, okay, you're gonna see 25%, 30% relatively easy, okay? But it's about being patient and understanding, doing the work, making sure you got the right mindset around what this is, okay? This is a hedge. This means you purposely know that you're getting this in preparation for the stocks to fall. So on the days the market is going up, this is going to be down, and you got to be okay with that. If you're not, you need to take profit right here, okay, and then rinse and repeat when it come back to 13. All right, but I just wanted to kind of show you how this works, why we do what we do. Guys, I'm very tempted to put 100,000 in this play alone. If I would have did that today, which I was going to do this morning, but I didn't, this would have been a quick $5,000 in a relatively short time, simply off of this going up 5-6% in the day. Okay, and so that's a really quick way to, again, not do options on it, nothing else, just buy the shares, let it ride up and take profit, and then when it come back to 13 or 12 or 11, do the same thing. All right, but just wanted to put that on you guys. Check this one out. ExxonMobil, ticker symbol XOM. This one was up 2.4% on the day. Shout out to the money team. We got after it in this particular play today. This was a money team play, but this is also my dividend play. This is also my contrarian play. I always keep energy on deck because it lets me know, like when tech goes down, I saw that this was going up. That's why we hit a home run today. We got this morning, guys, around here at $100. We took this up to, we took it to 102. Obviously, it went a little higher than that, but don't be greedy in this game. See profit, take profit, guys. That's what the name of the game is. You want to live to see another day. You want to fall in love with base hits. Again, in these type of environments, if they're going to sell tech off, you will see energy, healthcare, the SQQ, or this particular right here, the IWM, begin to broaden out. Now today, this one ran up as high as 201 before it got a double top and then got knocked back down to 199. Okay, this is a level of what we call an entry or a buy zone. 198, 197 ish en route to 205. Okay, today we had heavy resistance. Everything was kind of selling off to start the new year off, so therefore you just take what the market gives you on a day like today. Okay, but nevertheless, if tech is going to go down, if this holds up, this will do its thing even if tech is going down, because this is playing catch up from being beat down all of most of last year. Okay, but with that being said, these are 3 stocks I want on your watch list, or at least on your radar. This also keeps you diversified. You got something for the up days, you got something for the down days, you got something that's not necessarily tied to the tech sector. Okay, and so when you do this right, meaning when you have the right mix of what's going to work, what's going to take off, you should always be making money. But the name of the game still remains that you got to manage your risk. You still have work to do in terms of actively managing your plays, making sure you got a stop loss, making sure you where you want to sell at, understanding what's long term, understanding what's a swing trade, so on and so forth. Okay, so listen, guys, great job to kick off the brand new year. We will be getting after it first thing in the morning, so please be in the Discord if you're not already. And with that being said, guys, listen, we make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, and very few consider the journey. Do me a favor, don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.